Hello traders, this is Rich from Tradesight. This is the market preview for June 13th, 2014. It's going to be the last trading day of the week, and probably the first day that we're going to get the real futures rollover. We rolled over, and the new contract became the front month today, but tomorrow we'll definitely see the full adoption of the new contract. So make sure you adjust your futures. Today we had kind of a tough day where we lost 13 on the ES side and lost 27 on the Nasdaq side. The market internally was negative, but not terribly so. We're minus 500 issues on the broad market side and minus 900 on Nasdaq. The trend was elevated at 1.69, but the real movement was in the VIX, which was up almost $1 to 12.5. And we'll take a look at those charts in just a little bit. But let's move on and take a look at the futures charts first. All right, here's a look at the ES futures, which broke out of that multi-day range to the downside. A couple key features here. We did settle below the 6/8 level, and we also closed on a settlement basis below the 10 EMA. So this could be a potential turn here. We just have to qualify that by following through one more day below the 10 EMA, and we'll turn to short-term negative here in the ES futures. So above the range high is going to be the resistance area, about 1955 or so. Support is going to be kind of this magnet area of the 10 EMA, and then if we wind up releasing below that, the 5/8 level about 1906, 1907. NQ futures broke out of the multi-day range too, but they're still carrying a little bit of relative strength. You can see that we did go down to touch the 8/8 level at 37.50, but we settled above the 10 EMA, and that settlement above the 10 EMA is really the distinguishing feature that confirms that for now Nasdaq still has a little bit of relative strength. So we'll have to see if that can hold up or not. So to the downside, 37.50 is going to be a key area, and then if we release below that, the 7/8 level at 37.11. To the upside, range high from this move is going to be important at 38.04, and then the plus 2/8 level at 38.28. Keep in mind though that the Nasdaq side, unlike the ES side, is rolling down here from the overbought area on the Gann box, and that's an important distinction. Bonds caught a bit of a safety bid today, pivoting back above these little indecisive candles that we've been printing the last few days. So we put in a pretty wide range candle to the upside. We actually settled back above the 10 EMA. Didn't come quite into interaction with the 4/8 level at 112.50, but if this continues to the upside for Friday's trade, that's definitely going to be a level to watch. And then above that's going to be this little gap window here at about 113.5 or so. To the downside, the 3/8 level at about call it 111 is going to be important, because those are that's the low close of the move, and also the tails down here in this trading area. Gold futures were higher on the day for sure, pivoting back above the 10 EMA a little bit more aggressively. So the 2/8 level, and then the 50, and then the 200 could all possibly come into play. Note that we're 6 days up here in the seeker startup phase, so we got a little more room to run before we run into trouble. If we do break back to the downside, we're going to have support here at the 1/8 level at about 1265.5 or so. Big move today for the commodities was the crude futures. We actually pushed out above this triple top that we were kind of expecting to break with this lower high setting up, as we had talked about. We've taken out this 8/8 level by just a nominal amount, so I wouldn't say that this level is gone yet. The 8/8 levels are pretty strong, and this could be gamed tomorrow. But if we do break out and continue to the upside, plus 1/8 at 107.81 comes into play, and then 109 and 3/8 is next at plus 2/8. To the downside, if we do roll back to the downside, we're going to have support right in this area here where we have these couple of closes. There's 1, 2, 3 settlements. So just below 104.5 is going to be support at first try to the downside. Here's the 10-period moving average of the trend. So this is our 10-day trend. You can see that we had a pretty high reading today at 1.69 So that's going to figure into the average for a while, and that's going to lift things here. So we got close to this overbought threshold at 0.85, but never really got that tag that we were looking for. So we rolled back to the upside here. So we don't have that acute overbought condition in the market. We're actually moving away from that. But this could be just a bounce. If things turn around and we do get that 0.85 tag, then we're definitely going to be digging into the short side. But for now, definitely want to monitor this and see if that does in fact develop and does happen. All right, here, since gold's been in motion a little bit, I want to take a look at gold versus the gold-producing stocks. These are the gold miners. Typically, the gold miners will lead price. We can see that the gold miners here, which is the white-colored line on our chart, is definitely leading price here to the upside. So that definitely indicates that we could see some further advance in the gold futures themselves. So for now, definitely keep the gold futures and the gold stocks on the long watch list until this condition starts to normalize. But for now, the gold miners are leading price to the upside, and we would expect that the gold futures would have a bias to the upside. It doesn't have to be every day, but expect that as long as this condition persists, where the gold miners are leading gold futures, we're going to have a bit of a bid under the gold market itself. Also want to take a look at that same relative relationship between oil futures, which are the blue line here, and oil services stocks. The oil services stocks actually have a lower low in place here and a lower high, and have not punched out to a new high, while crude futures have broken out. Here's the 1, 2, the triple top. We broke out to the top here in crude futures. What you really need to do is you need to see the OSX breakout to have something really sustainable here. Otherwise, it's really more of a geopolitical reaction than anything else, and it's not necessarily something that's truly sustainable. So while the geopolitical reaction could last for a number of days or weeks, it doesn't necessarily mean that that this is a place that is going to have a normal relationship where we have the OSX kind of leading price. So I think you just have to discount this a little bit right now with what's going on in the Middle East, and definitely be willing to play the oil futures on the long side, kind of in and of themselves, if the momentum continues to the upside. And breakout of a triple top is pretty notable. And as we always joke about in the trading lab, there really is no such thing as a triple top. It really is just a range breakout. So definitely pay attention to that, and make sure you're on top of the technicals there in the crude futures. Also want to take a look at the cumulative advanced decline just for the overall health of the market. Obviously, we've taken a hit here in the advanced decline line for the New York Stock Exchange side, which is the broad market side, but it hasn't changed trend yet. We're going to need another couple of days of sustained negative numbers to really change trend. So for now, the trend's still positive. Nasdaq's still in a recovery mode. Don't want to see this level lost here, which is still a little ways away. But if this level gets lost, we could wind up sliding back into a negative trend on the Nasdaq side. But for now, you can see, if you imagine the DTL here, the trend line, we still have a positive turn on the Nasdaq side. But the other thing to keep in mind, though, is that while the Nasdaq is trying to push out to new highs, the cumulative advanced decline line is not, which is certainly a negative divergence. All right, last thing I want to talk about is the sentiment survey from the last week from AAII. Starting to build up a pretty fair amount of folks in the bullish camp. We're up 5% this past week. Still a little below that key 50% level where you start to get terminally bullish, where the market really needs to correct to the downside. But the one feature that's really standing out is we've got a very, very low reading of bears. Typically what you really want to see is you want to see the neutral column down to about, down close to 20%, and certainly under 25%, where you have nobody with kind of a non-position where they could swing either way. You want to see the bull camp bloated. You want to see a skinny number of bears, but you also want to see a very low level of neutral people, because a lot of times the neutral people can jump right up to the bull camp or the bear camp. It's harder to go two leaps at once, but I think these numbers are pretty much reflective of the overall environment and the overall outlook after the ECB announced that they were going to really get proactive in keeping rates down in Europe. But this is definitely right on the cusp of getting terminally too positive, and something that needs to be noted and should be monitored to see if we get that terminally overbought reading of a little bit closer to 50% bulls, less than 25% neutral, and certainly less than 25% bears. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.